Hello and welcome to India Business Hour. I'm Parikshit Luthra. Here are the headlines we are tracking this evening. A late sell-off on Dalal Street takes sensex Nifty lower by 1%. Mid-caps and small caps also decline. Auto stocks among the top laggards. India and United States pull all stops to conclude the first tranche of its proposed trade deal before Trump's reciprocal tariffs kick in on the 2nd of July. Sources say that the US government is yet to clarify if India would be exempted from reciprocal tariffs in that case. India wants a deal which provides 0 for 0 tariffs, while Washington wants to impose a 10% duty on all Indian goods.
Making policy basically based on who talked to the president last. You know, God knows what the elevator operator will tell him next.
Nobel laureate economist Paul Krugman slams US President Donald Trump for what he calls flimsy policy making, says it will take many years of responsible governance to undo the damage done over the last 4 months. Adds that United States now looks like a country which can no longer be trusted to do the right thing. That's an exclusive. Reserve Bank of India is likely to tighten rules governing dividend distribution by banks. Sources say long-term value creation is likely to be prioritized over higher dividend payouts. Final guidelines to be released soon. Finance Minister Nirmala Sitharaman warns delays and opacity in regulatory clearance can impact trade negotiations with other nations. Calls for rigorous oversight and seamless approvals at the 16th annual day of the Competition Commission of India. Vodafone Idea stares at a dead end after Supreme Court rejects any relief on AGR dues. The stock falls 11% in 2 days, losing market cap worth close to 9,000 crore rupees. All eyes now on the government, which has a 49% holding in the troubled telecom company. Hyundai India sees headwinds to growth. Management expects muted growth this fiscal amid macroeconomic and geopolitical challenges. Foreign Secretary Vikram Misri briefs all-party delegations on India's stance after Pahalgam attacks in Operation Sindoor. 7 delegations, including 59 members, will visit 32 countries with multiple dossiers on Pakistan's involvement in terror activities. Russian President Vladimir Putin refuses to agree to an immediate ceasefire in Ukraine after a 2-hour phone conversation with US President Donald Trump. Moscow and Kyiv agreed to resume direct talks. Trump hints US will step back from its role as a mediator if the negotiations fail. At least 73 people killed in Gaza after overnight raids by Israel. United Nations warns 14,000 babies could die in the next 48 hours without aid. UK, France and Canada threaten sanctions on Israel if it does not stop the military offensive. Straight to the day's market action. Market witnessed an all-round fall with frontline indices slipping 1% each. 42 of 50 Nifty stocks closed in the red. Auto stocks skid in trade, reversing Monday's gains. Sensex dropped over 870 points, while Nifty fell more than 260 points. China has cut key lending rates for the first time in 7 months as it seeks to bolster its economy. The reduction comes largely on the back of a stronger yuan and dormant trade tensions with the US for now. Asian markets rallied in trade after China's announcement. Jamie Dimon, the CEO of JP Morgan Chase, says markets and central bankers have underappreciated the risks created by US deficits, tariffs and geopolitical concerns. Speaking at the bank's annual Investor Day meeting in New York, Dimon also said that even the risks of inflation and stagflation have not been properly represented by the stock market values.
My own view is where people feel pretty good because you haven't seen an effect of tariffs. The market came down 10%, it's back up 10%. I think that's an extraordinary amount of complacency. That's my own view. That when I've seen all these things adding up that are on the fringes of extreme kind of thing, I don't think we could predict the outcome, and I think the chance of inflation going up and stagflation is a little bit higher than other people think.
Nobel laureate economist Paul Krugman has criticized US President Donald Trump for what he calls flimsy policy making. Speaking exclusively to CNBC TV18, Krugman said it will take many more years of responsible governance to undo the damage done over the last 4 months. He added that the United States now looks like a country which which can no longer be trusted to do the right thing.
In terms of a trade deal, I've actually been mentioning India as one of the few places where there could conceivably be a meaningful trade deal, because India, although it's come a long way down from the extremely high levels of protection it used to have, still India does have significant tariffs, and it can offer the United States concessions in the form of reducing those tariffs. It's very different. We had an alleged trade deal with the UK, which was completely meaningless. It had to be meaningless because the UK has less than 1% tariffs on US products. So the UK couldn't make concessions because there was nothing to concede. India could make some concessions, and maybe that's enough to make some difference. Maybe it's enough to make the United States for Trump to declare victory. In terms of the impact on either economy, it's really not going to be a big deal. India is, among other things, India is not close to the United States. It's not a neighbor. America is not India's biggest trading partner, and India, from the U.S. point of view, is a really quite minor trading partner. It's a growing economy. It's more significant than it used to be, but it's not nearly as big an economy as, say, the European Union, and it's not nearly as close as Canada or Mexico. So, but U.S. business will not even notice whatever the deal is. It will have no visible impact on the U.S. economy, and probably not much impact on the Indian economy either. No winners economically. This is destructive for everybody. And, it tells you something about how much we've lowered our expectations, that we think of as a 30% tariff as low. I mean, that's still a crazy high tariff. 145% tariff basically meant shutting off trade completely between the United States and China. A 30% tariff, there's some estimates and assumptions to be made, but when I run it through my model, I say this will only cut trade between the United States and China by 65%. Unfortunately, we're hearing more than I really wanted to know about the actual policy process. We know that major changes in U.S. trade policy come about because some members of his cabinet managed to catch him in his office, while other members of his team are in meetings elsewhere and persuade him to make major policy changes, and they sit in his office until he's posted the policy change on Truth Social, the world's greatest nation. And we're making policy basically based on who talked to the president last. God knows what the elevator operator will tell him next.
Yes, that is Paul Krugman expressing concerns there about Trump tariffs. You can catch the entire conversation with the Nobel laureate at 9:30 p.m. on Global Eye, right here on CNBC TV18. Let's move on. India and the US are pushing to conclude the first tranche of its proposed trade deal before Trump's reciprocal tariffs kick in on the 2nd of July. US officials have also conveyed that they are not in a rush, even as efforts are on to reach the finish line on an early trade deal. Sources also tell CNBC TV18 that the US government is yet to clarify if India will be exempt from reciprocal tariffs if the deal's first phase is completed before the duties take effect. India wants a deal which provides for zero tariffs, while Washington wants to impose a 10% duty on all Indian goods. Finance Minister Nirmala Sitharaman warned against delays and opacity in regulatory clearances, saying it can impact trade negotiations with other countries. The comments come amid intense trade negotiations between India and the US over a free trade agreement. Speaking at the 16th annual day of the Competition Commission, the finance minister called for rigorous oversight and seamless approvals.
In today's interconnected and fast-paced economy, delays in regulatory clearance can lead to uncertainty, disrupt commercial timelines, and potentially erode the intended value of transactions. And globally, it has an impact even as we negotiate free trade agreements with different countries. It is therefore imperative that regulatory frameworks, while maintaining rigorous oversight, also facilitate swift and seamless approvals for combinations that pose no harm to competition.
And Hyundai Motor's Chief Operating Officer Tarun Garg has said that the headwinds in the current fiscal could dampen the auto major's growth. Speaking to CNBC TV18, Garg said the tensions between India and Pakistan and tariff uncertainty have impacted demand.
In financial year 24-25 and 25-26, we can see that there are some headwinds, of course, but like every 5 years in the industry, we see a year where we see some muted growth. So we have seen that because of the geopolitical situation, Indo-Pak tensions, of course, the uncertainty around the tariffs. I think one thing which a car customer does not like is the uncertainty. And I think that has really affected some kind of a IT slowdown, of course. The interest rates have been high. But when we see the positives, I think now we have seen the repo rates coming down.
Global private equity giant Blackstone is likely to acquire a stake in AGS Health. As per a money control report, Blackstone emerged as the highest bidder. However, a final call is yet to be taken. The report further stated that the valuation is expected to be in the range of $1.1 to $1.3 billion. Moving on, Reserve Bank of India is likely to tighten rules governing dividend distribution by banks. Sapna Das is here with the details. Sapna, what can we expect and when will the new rules be notified?
Well, there is an expectation in the government corridors that basically the final guidelines as far as the dividend distribution by banks primarily is concerned, those guidelines may be brought out by the central bank soon enough. Having said that, various stakeholders have done a lot of consultations in the last 1 odd year, in fact, over 1 year now. So as we had reported earlier as well, so the feedback has been basically that, banks should probably desist from higher dividend payouts. And the framework that's being worked out by RBI should be in accordance to that. So basically, the theme here is that have more capital, plowed back into the bank balance sheets. They should be cash rich. And in fact, all of that, the strength should reflect in the earning per share in the bank stocks rather than in terms of hefty dividend payouts. That's the overall theme that has emerged from the extensive consultations that have gone on over the last so many months. And of course, government is a major shareholder over there. Having said that, a couple of specifics, that have been asked from the RBI, and there's probably hope that something may happen on that front is, of course, in the earlier draft that they had released, they had spoken about capital adequacy norms, how that can be an appropriate benchmark to work out the dividend payout ratios. The feedback that's coming in is that probably return on assets should also be included because that could be a better eligibility criteria for deciding dividend distribution by banks. That's one. Second, also the kind of NPA range that the RBI had mentioned, in what range the NPA should be for banks to make them eligible to announce those dividend payout ratios. So there's a complete table that RBI had put out. So there again, probably the stakeholders want that NPA ratio to move in a tighter band. This is basically to build in more resilience on the part of the banks and to be more cautious. So the overall theme here is that let the banks be cash rich. Let's not get into the process of, kind of equating bank dividends the way the CPSE dividends are decided. Basically, that's the theme. We'll have to wait and watch and see to what extent these extensive considerations that have come in from various quarters are incorporated by RBI and those final guidelines which are expected soon.
Gopal Srinivasan, Chairman and MD of TVS Capital Funds, has called for increasing the collective investment cap on AIF schemes by regulated entities to 25%. Remember, the RBI has proposed increasing that cap to 15% in its draft guidelines.
In a AIF, most significant changes in AIF require a 75% of investors by value to come and vote. So 25, if all REs put together in various forms have 25%, honestly, they can't make any change to any of the structural things like who's the manager or any changes in PPM and so forth. And I think that should give a huge amount of comfort for basically the Reserve Bank. So I would recommend 25 if they are willing to look at it. So other than that, I would say it's really well drafted, no shortcomings.
Growth in India's 8 core infrastructure sector slowed to an 8-month low in April. This as growth of production slowed in key industries like refinery, fertilizers, electricity. Only 2 of the 8 core industries, coal and natural gas, reported a sequential rise in production during the month. And moving on to global earnings now. British telecom firm Vodafone has reported a full-year operating loss of $462 million. However, the company reported a 2% jump in revenue. Vodafone has noted that its financial performance for 2026 could be impacted by significant uncertainties due to the current macroeconomic environment. And moving on, Vodafone Idea has been under pressure after the Supreme Court rejected its petition seeking waiver of interest and penalty on adjusted gross revenue dues. The big question that we are asking today is, if an AGR relief is ruled out, what are the other options available before the government? Remember, the government has a 49% stakeholding in the telecom company. Ashmit Kumar joins us now.
Well, let's quickly set the context. Let's bear in mind that Vodafone Idea has AGR dues of over 83,000 crore rupees, has spectrum dues of nearly 1.19 lakh crore rupees together, add up to dues of over 2 lakh crore rupees. It is on the back of that that Vodafone Idea had knocked on the government's door saying that if the government relief doesn't come their way, they will be heading into insolvency. They will not survive beyond FY26. And that's the reason why when yesterday the Supreme Court refused to grant any AGR relief, it came as a huge shock for the company going forward. Now, what we understand and what we're trying to look at is the various policy levers that may be available with the government that they may want to consider. Number one, as far as the AGR issue is concerned, that appears to be a closed chapter. Bear in mind, Supreme Court, at least on 5 occasions, has either confirmed the demand or has refused to grant any relief. So no relief on the legal side. The government on its side is saying very clearly to the Supreme Court as well that, look, our hands are tied. We cannot consider their application for grant of AGR relief. So that's done and dusted. The other policy levers, one of the concerns that had been raised by Vodafone Idea is an extension of the spectrum payment schedule from 18 to 20 years. That's another policy lever that the government may look at, a moratorium of spectrum dues. In 2021, there was a cabinet relief package which allowed for a moratorium plus a conversion of dues into equity. Can that be extended for spectrum acquired post 2021? That is another policy lever that the government may consider. The third is further conversion of dues into equity. Minister, as well as the telecom minister, as well as officials of the DOT have repeatedly said there will be no further conversion. 49% is the cap. That's where the current government shareholding is. But given the extreme situation, given that Vodafone Idea is claiming possible insolvency, is that another lever that the government can consider?
And Communications Minister Jyotiraditya Scindia has said that satellite telecommunications would complement terrestrial networks like Airtel, Jio and Vodafone Idea. Speaking at an event, Scindia said that he's confident that this rollout will be the fastest in the world.
I am very confident that as the permissions for every operator are given out, they will reach far and wide. As TRAI chairperson also said, we are the second largest market in the world. And therefore, the length and breadth of this very robust telecom market, the SATCOM market, will also play a very complementary role. TRAI has done its job of giving the recommendations. Now, you're very right. The job is in the government's quarter to be able to, on the basis of the recommendations, to be able to push forward this policy. And as I've mentioned to you, we're very eager in pushing forward this policy as soon as possible.
And coming up on India Business, our Foreign Secretary Vikram Misri briefs all party delegations on India's stance after Pahalgam attacks and Operation Sindoor. Details in just a bit. And you can also catch all CNBC TV18's news and updates on YouTube, Facebook, Instagram, X and Jio Hotstar. You're watching India Business Hour. In international news, Russia's President Vladimir Putin has refused to agree to an immediate ceasefire in Ukraine. The announcement came following a 2-hour-long phone call between the Russian leader and US President Donald Trump. The US President has said that Moscow and Kyiv have agreed to resume direct talks. He also hinted that US will step back from its role as a mediator if the negotiations fail. And staying with international news, Israeli forces continue to bombard Gaza, killing at least 73 people since midnight. This comes after Israel ordered Palestinians to evacuate Khan Yunis ahead of attacks. Israeli Prime Minister Benjamin Netanyahu has dismissed calls of a ceasefire and has threatened to take complete control of the entire enclave. Meanwhile, Canada, France and the UK have threatened to take serious action against Israel if it does not end its renewed offensive in Gaza. The government is ready with delegations comprising lawmakers across party lines and former ambassadors to isolate Pakistan diplomatically. These delegations will visit over 30 nations over the next fortnight to convey to nations that India has been a victim of terrorism emanating from Pakistan. The External Affairs Ministry, spearheading the campaign, held meetings with lawmakers and gave them key talking points on India's stance on terror. Pallavi Ghosh has more.
First round of briefing of the first round of delegation, which is going to be travelling abroad, was done earlier today, and the Foreign Secretary Vikram Misri was the one who briefed them, but the president also over there were many of the ambassadors who will be travelling as a part of delegation. Well, the group which was debriefed today were ones which had Abhishek Banerjee, Hemang Joshi of the BJP, Aparajita Sarangi, SS Ahluwalia, and they're going to be travelling to countries like Malaysia, Singapore, Japan. This is a part of the larger efforts being made by the government to send 7 such teams across the world, going to America, UAE, UK, other European countries, African countries as well. As we all are aware that the Pakistan is running a misinformation campaign, rejecting Operation Sindoor, saying it was a failure and that there was massive damage on our side. But more than that, also blaming the Indian side for needlessly targeting them, saying that they were not a terror country. But what is it that the Indian side is going to be saying? One, that there are multiple proofs and dossiers which show and give evidence of the fact that Pakistan indeed is a terror state. And the world needs to come together on this. The kind of economic aid you're going to provide to them through IMF, ADB is not going to be used for the people of Pakistan, not their welfare at all, but it is going to be used to fund terror activities. So at the briefing session which was held, all the MPs were told about Operation Sindoor, the logistics of it, how it was conducted, what really were the targets, and that it was only 9 terror hideouts of Pakistan which were targeted.
India's Met Department has said that the southwest monsoon is likely to arrive early this year. The IMD has said that monsoon is likely to hit Kerala in the next 4 to 5 days. This would mark the earliest onset of monsoon in India since 2009. Remember, the monsoon generally begins on the 1st of June. Heavy rainfall in Bengaluru in the last 36 hours has led to waterlogging and flooding on the city's roads. Showers are expected to continue for the next 2 days, with the IMD issuing an orange alert for the city. A red alert has been issued for the state of Karnataka, with heavy rains expected to persist for the next 3 days. As President Trump pushes to position the US as the top global destination for foreign investment, the spotlight is on the Select USA Summit, just outside Washington, D.C. CNBC TV18's Aishwarya Anand reports on how India is making a strong play and pitch at this startup summit.
As global markets closely watch President Donald Trump's every move, another major event is unfolding: the Select USA Investment Summit. The aim of the event is to intensify Trump administration's effort to turn the United States into a global magnet for foreign direct investment.
What a time to invest in America. We are fully committed to maintaining our position as the most powerful, dynamic, and resilient economy in the world.
This year, a strong contingent of Indian companies have also made its presence felt, eager to explore opportunities and expand their footprint in the United States.
President Trump and Prime Minister Modi talked about increasing U.S.-India bilateral trade to $500 billion per year by 2030. And we can't do that if we don't invest in each other's companies. And so just as American companies come to India and invest and start factories and businesses, we're looking to give these Indian entrepreneurs a chance to come to the United States and explore those possibilities here.
In the light of the global economics and uncertainties and shifting trade policies, how do you think that you will prepare to navigate the risks that are associated with international expansion?
The way we evaluate risk is about understanding the market dynamics. And as the fundamental dynamics of the market is not changing, I believe the risks are fairly mitigated. We also believe that part of the risk mitigation is also not putting all the eggs into the same basket.
How are you supporting Indian companies in mitigating risks and ensuring smooth market entry?
We're extremely positive about the negotiations that are going on between India and the US on the trade frameworks, and we hope that from an industry perspective, this will work out in mutual benefit. The way that Indian companies should be looking at the US market right now is through the states. The future is in the states.
As Indian companies look to deepen their US presence, smooth visa access remains as critical as favorable trade policies. Questions are emerging around whether ongoing trade tensions could spill over into visa policy.
If there is increased U.S. investment based on these trade policies from India, I think that will actually increase the amount of Indians that are applying for certain categories to be able to come work here in the United States.
Bilateral trade tensions between India and the US are heating up. President Trump has reinstated tariffs on $7.6 billion worth of Indian steel and aluminium exports. India is hitting back, notifying the World Trade Organization of planned counter duties on US products as per sources. The US has also suspended additional 26% tariffs on India till 9th of July, keeping only the 10% baseline for now.
There are trade talks going on, and I won't predict how those trade talks will come out. But if those trade talks are successful, we pull down tariffs that impose additional costs on businesses, but we also address some of those non-tariff barriers.
With India Commerce Minister Piyush Goyal in the US to meet USTR Jamieson Greer, US Commerce Secretary Howard Lutnick for negotiations, we'll have to wait and watch how these high-stakes discussions play out. In Washington, D.C., Aishwarya Anand for CNBC TV18.
With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC TV18.